No, Max. That concludes the giveaway section of our evening. Now we're gonna go to Tech Talk.
Yeah, now it's big brain Max time.
I always start by saying this is not financial advice. We're just trying to educate people. So don't do what we're telling you to do. Just try to learn from us and then apply that to your own investments.
Yeah, this is more like teaching how to fish, like to understand better how these mechanisms work, so you can make your own decisions.
Yeah, today I wanted to talk about just in general, since we're all in like the crypto space by being in the NFT space. I'm sure people have heard a bunch of like trading talk and jargon, and like have seen a bunch of pictures of charts posted on social media forums with like lines drawn on them and people saying things about those pictures that indicate a future price direction. And I wanted to just like do a quick dive into like how to understand charts and what half of these terms mean, just something like an overview. And then on I think this weekend possibly, I have a friend of mine he's like a trading partner. We've been trading crypto and like stock assets for like years, and like wrote a little script and everything together. But he might come on here and we could do like a much deeper dive of like technical analysis and how to chart a graph to decide which direction to take a position in. But for now, I just want to cover like some basics. So starting off, I went to the website TradingView. I really like this place to chart. On TradingView, I click on charts up here, and then top right here, it'll let you choose like stocks, futures, forex, like basically anything that's traded and charted somewhere that has an API, you can track on TradingView. So let's do Wax. So we want Wax and then Wax Tether, and you can see it's charting like Qcoin, it's charting all these different exchanges where Wax trades against all these different pairs. So to get a good chart, I want something that has a decent like price history, and I think Wax Tether on Qcoin is something that I trade, but it hasn't existed for very long. Yeah, so here's the chart. Like it starts here. Get out of here. So this is not going to be super useful because we don't have a lot of information in the history of it. So let's just check Wax and Bitcoin instead.
What about like Bitrex? Wax Tether on Bitrex has a decent history,
I guess that's true. Yeah, that's been there for a while. So Wax
or Wax
USD.
Yeah.
Let's see how long that's been trading there. Oh, okay. Here we go. Yeah, let's do Wax in dollars on Bitrex. That's been. Oh my God.
So like a good use case is like, Wax just recently went up about 30% from about 12 cents to 18 cents recently. So maybe you can kind of like, would you want to like maybe read some of the movement?
Yeah, first let's get into like the overall like understanding of what we're looking at before we try to find patterns or like make a decision here. So this right now, what we're looking at is the chart of WaxP in US dollars. Each one of these sticks here is called a candle, and each candle right now represents up here the D 1 day. So every time you see one candle, that's one 24-hour trading period. When you see the way that these candles, they have like these wicks on the top and the bottoms. Those wicks are basically the outer limits to which a price has traded at, and then the candle where it gets fat is like where the trading volume like back and forth existed during that 24-hour window. By that I mean in this 24-hour window, the price was never like bought and sold lower than here. It was only like it only moved in one direction in the wick, basically. So people only sold this huge wick, no one was buying it until here, or like bought the wick and then it started getting sold off again in like quantity basically there. So now the way that these candles are drawn is also dictated by a specific like mathematical algorithm. This is like the vanilla version that candles will draw. It's that it'll draw your candles for. It's a little choppy. It's a little harder to understand, I feel like. And personally, my favorite of the charting algorithms is Heiken Ashi, which if I click on this candle here, I can change it to, I want like, let's see, Heiken Ashi, there it is. So this is just a different algorithm to calculate the exact same data, but you'll see now it's smoothed out the graph. It's a lot cleaner. You can see here's a chunk of green, then it turns red for a minute, then green again, versus the original like default where it's a lot more like spotty. So again,
does that take out the wicks, the Heiken Ashi?
Heiken Ashi still has wicks. It's just it charts, basically it's just a different algorithm for like how to plot candles on a graph, and in my opinion it's cleaner and easier to read. So that's, over the years, that's the one I've like migrated to. Well, me and Sid kind of helped me understand a lot of this stuff.
I have a lot of questions, so I will try my best to ask some questions that I'm sure other people will ask. So I'm gonna ask very stupid questions because I am very stupid. So like sure. What is the top, like the top and the bottom of the candle? Can you just elaborate like how they define the top and the bottom?
Well, you finish, but first we got to make sure that Mark knows the no negative self-talk is allowed.
We have a no negative self-talk rule internally.
Yeah, so the candles and then the wicks of the candles are based on like trading like volume, basically. So like here it's like the wick is basically, I guess the short version of it would be like, the wick is a bunch of limit orders that were already sitting on the order book being filled up on the way up. And then here it's like the trading back and forth starting. So it's just, this is like representing a very short time frame, and you can actually see a better understanding of this if we change the time frame that these candles are plotted on. So right now this represents 24 hours. This is the next 24 hours. Let's change this from a day down.
So I mean, like if I'm looking
hours.
at that like second to last candle, like one of these candles, like the top is like say 17 cents and the bottom is like 15 cents. So does that mean that there was trading back and forth at its lowest 15 cents and at its highest 17 cents, but for the day it was net positive, so that's why it's green?
I think the short answer is like the candle is this was a very short representation of this 24-hour period. It peaked up into these values, but for like a matter of minutes. This range, it was trading the entirety of the 24-hour period.
So the thickness is based on the volume within those ranges.
Yeah, basically.
Oh, okay.
So watch, you
Perfect.
can see here, if I change this down to like the 1 hour, you'll see the candle's still thin. If you could go all the way down to, I don't think I can get to 1 minute, can I? Oh, you can. So you'll see like how short it lived up there. For like it peaked up for like 1 minute and then dropped down within the same like 3 or 4 minutes. Like right now each one of these candlesticks represents 1 minute. So you can see it actually only lived above 17 for like 1, 2, 3, 4, like 15 minutes, maybe 20 minutes or something, like in this little spike. So if you go up a candle now, that spike, if we go up to like, you know, so it was 15, now we make it 15 minutes, then that same like spike should then show up as a wick again. There you go. So now here it is, like,
I see. So you don't want to read into the wick data as heavily as you would for the thicker ones.
Yeah, the way that I understand, like, I don't care too much about the wick and the thing. What I'm looking for is like overall confirmation or rejection of the notion that the asset is moving in a specific direction. So let's get back to like understanding that. So I'm in at 15 minutes. This is insane. This is nonsense and noise. Like maybe a bot can understand this. I usually don't look at these charts much closer than like 4 hours. This is like as noisy as I like it to get, because 4 hours is not like, right now each one of these lines represents 4 hours of time passing. So the main things that I like to do when I'm charting an asset is to look at what's called indicators for this specific asset. And there's like 3 big indicators that I really like to follow and that I think really matter in understanding the health of like the market of a specific asset. And let me start with the RSI, which is the relative strength index. So I'm clicking this effects button here, indicators. And this is all free, by the way. You can just go to TradingView and start charting any asset like this too. So I'm going to type RSI in here. Here it is. It's a built-in one, relative strength index. So I'm going to tell it to add that to my chart by just clicking it and then get out of here. So this purple range in the relative strength index is like where a trader or like an asset should be basically at any given time. When it becomes to the top limit outside of it, that would be what a trader would describe in a technical analysis term as overbought. And when the RSI breaches this like outer limit, then the asset would be considered overbought, and then conversely below, it's oversold. And you can see that when it becomes very oversold, the price direction turns around. Every time this gets down to like the bottom here will also match up with a bottom in the price action. Seeing that here. Okay, very overbought. So then again, when this is playing out, we can see, like right now, for example, we had a big pump. We're on the 4-hour chart right now. So this is like yesterday, big pump, 30% gain. RSI is coming up. We hit like peaking up here, way overbought. It's now come back into like a reasonable range here. You could expect it to probably continue to cool off to the mid range if we're going to keep moving up. And then, you know, watching the RSI and the price action, kind of try to start understanding and timing your trades. But again, there's more indicators than this. This is just the first one I wanted to open. So the RSI is the relative strength index, and it indicates basically I actually don't understand the algorithm that's plotting onto this graph. I just know that people who do put a lot of stock into technical analysis use this indicator, and that is what they're looking at. Like, I wish I knew exactly what we're looking at plotting wise so I could explain that, but I'm not sure. But I am sure that when this goes up, that is an indicator suggesting overbought, and when this is below here, it's indicating oversold. And that's enough for what I'm basically looking for, because I'm not like trying to make an absurdly complicated bot strategy or something. I'm just trying to get a snapshot look at an asset and see if like now is a good time to buy, if now is like a time where it's like way overbought or something like that. Like, is it a good entry point or something like that? So again, the next indicator I want to move on to is, I really like to look at it's called the Bollinger Bands.
Here, so what timeline is the RSI based on? So I think the RSI is tracking the same.
Yes, the same timeline as my candles. So if I change from my 4 hours right now, if I change this to 1 day, you'll see that we're actually replotting the points here. So we haven't even gone into overbought territory, even though we're looking at the same price information now.
Is there a particular time frame that looking at RSI is like more effective? Is it better to look at RSI on a longer time frame, like a week?
It's definitely, you want to look at all of the time frames. Like, you want to cycle through them. Like, if you're only looking at it like on the 4 hour, like right now, where it looked like, okay, like I was saying, it was a little overbought, it's cooling off, it could cool back off down a little bit, and that's on a 4 hour time frame, you know? So it's like, well, okay, do I want to wait for it to cool off or not? Well, let's see what is happening on the, like, zoom out a bit, what's happening on the daily. Well, it definitely could cool off. Like, it has like slowed a bit here, but it could now continue. It hasn't reached overbought. It doesn't seem outrageous to assume that a pump can continue based on this time frame. So do I want to risk it on the shorter time frame, knowing that the longer time frame suggests that we're not quite in the like overbought territory? If I go out even further than this, I'm sure we'll see much better picture. That's like, okay, maybe, you know, depending on how long of an investment I'm making right now, am I buying today to hold for 3 years, or am I holding for 3 days? Which timeline do I want to look at? And again, usually the answer is all of them, so that you have the full picture and make as informed a choice on your.
Okay, so it depends on the style of trading you're trying to do too. Yeah. Obviously, if you're trying to do short-term swings, you could look more at the shorter.
Yeah, exactly. Like right now, if I was trying to do this and I'm going to sell in a couple hours, I could look at the 1 hour and be like, oh, look at this. Okay, we are actually like on the very shorter timeline. It's looking like we're starting to approach below the middle of the RSI, and then if we go even shorter than this to the half hour, we're coming to oversold. So on the very short timeline, it might be a good time to enter the market right now. We're like starting to find a short-term bottom.
Okay, and then let's see. It says like Seeker asks, the top and bottom of the RSI is based on what? So I guess like, what do you understand? Like, can you explain what the algorithm does? Like,
I know it's a combination of like the price, the amount of money moving like at that price, so the volume, which like you can see here, these like long sticks represent volume right now, so you can see there's a lot of people buying on the way up here. So that is why partly the RSI is going down, going up as well, because it's not just the price is going up, it's a lot of people are buying, not a lot of selling, because this candle is green, so overwhelmingly this volume is coming from buying. So it's like it's an aggregation of a bunch of factors, and I know there's probably like technical write-ups on it and stuff, but I for sure would like to understand it better than I do, and because I don't understand it super well, I don't want to like give incorrect information on how it's calculating. I just know that people look at this to make these assumptions just based on where these points on the graphs are, more than I understand exactly how it's deriving where to place the graph. But yeah, let me add the other thing I was talking about. So the next thing is the B bands or Bollinger bands. BB bands. This is a public, somebody made this one, but you can use all this stuff for free anyway, I think. As far as I know.
Go back. Just do B. There it is, Bollinger Bands.
Bollinger Bands, yeah. There it is. So the built-in ones. There we go.
So I guess to answer your question, Seeker, the shaded area is based on an algorithm that we don't understand well enough to be able to describe. But it's, you know, it's like it's an index that's been used for a long time.
Yeah, and this is how people who use it read it. It's more of a thing where like you can read it without understanding how it was written, I suppose. And I think a lot of people who do these technical analysis things, especially the stuff that I read online, a lot of these people don't even understand any of this shit that's happening.
Yeah,
like a lot of it is nonsense.
At least for me, like I make music in a digital audio workstation. I can tell you how to use the digital audio workstation, but I can't tell you how to build a digital audio workstation. Like I'm not the programmer. There's a different skill set to know how it works than how to use it.
Yeah, exactly. So here I've added another indicator. This is the Bollinger Band. It's another built-in indicator. And what this has done is plotted the moving average, which is this red line here in the middle. I think it's the 50-day moving average possibly. And the further out you zoom, the wider like the moving average goes. So if I go to a day, it's like, it smooths out as you can see. Oh my God, why doesn't it leave me alone? How do I click out of this thing?
Maybe just refresh.
I guess.
I don't know. Maybe they only give you a certain amount of time to use it.
I have a subscription. I just wanted to set it up on the vanilla version because you can do all this stuff for free. I don't want to have to like put it together in a way where like it looks like you need to pay for it. You don't. Let me just pull in the Bollinger Bands again. So here we have the moving average. So it's basically, it's a much smoother line in the center here, and this line often will be like the resistance level. When people talk about a current resistance level, the moving average would be that level. And in a bull market, when your price starts to correct, it'll be running up like you see here. It'll correct to the middle of the B bands again, and then it continues to run up as long as you're in a bull market. Correcting down, middle of the B bands, you can see it's touching the B band. It'll probably bounce again until the market turns bear. Here we've broken the B band and we lost that support. At this point is, in my personal trading, when we lose the Bollinger Band support on the daily, this is the first indicator for me that the trend is reversing and it's time to sell. So on an asset like this, I might have bought like way back here possibly. I would not have sold until the day closed well below the Bollinger Band. And again, it might have happened here, so I might have sold here. But then when it closed above the B bands again, I would have bought back in. So I'd have been back in here again. I would have stayed in, and then I would have sold here. And then again, it drops below. And then again, the day doesn't, like the candle wicks above, but it never closed above the Bollinger Band.
So that would be like a retest that you would be.
Yeah. So
you
here
wouldn't
we're
want to take the
retesting
bait
the
in like that kind of bull trap in the sense that it hasn't gone above the resist or gone above the B band.
Yeah. And you can even see here where it's trying to hold that resistance before it fails and then falls again. So it does, like, it's obviously it's just the indicator. It's not like flawless, but usually this is like a big help for. So here where we've lost it, and then now you're like the trend has turned bear. Bear meaning it'll go down, bull meaning it'll go up. So here where it turns bear, we're down, and then when we try to approach it again, we try to close above, barely do for a minute. This is kind of a fake out, and then it like seems to have lost the support again.
Real here, quick, Max, just so I can answer some questions here. So. Where did I find it? Let's see. Do you use stochastic oscillator? I imagine that's like another overlay option. Also, real quick, someone pointed out that you can only use 3 overlays at a time for free on that site.
Unpaid. Yeah, I was only ever going to get up to the 3. So I was going to do the Bollinger Bands, the RSI, and then the third one, which I'm going to show here in a second. Oh, here
are
I've
you familiar with this term, the stochastic oscillator?
The stochastic oscillator, yeah, it's a more like advanced indicator, and a lot of the stuff is like it's just tools again. It's like putting more lines on the chart or showing you more like information. So I don't use a lot more than the 3 that I'm talking about right now. Like it really, a lot of it is like there's a lot of ways to interpret and to make data fit pretty much any theory and any narrative. And I like to just use as bare bones of an approach as possible, which for me is literally the 3 indicators I'm talking about. And then that's kind of like where I stop. And then that's where Sid comes in, and he has like a way deeper understanding of technical analysis. And like I said, I invited him on, and I want to have him answer that question, I think, more fully. But as far as what I do with like technical analysis and charting stuff when I make my decisions, the 3 that I'm talking about now are all I use. And then of course jumping in and out, like I was showing, like so, like you saw when I go out to the weekly, we're actually still below the Bollinger Band middle line, and we just wicked up to support. This is what I was saying the other day when wax pumped down. I was like, oh yeah, we're just right on support, so it might not be a bad time to sell because we're not closing above support. This is what I meant by that. 18 cents was support.
So I think the broad strokes is to use multiple time frames and multiple indicators to get the full picture. So you're not drawing conclusions from any one time frame or any one indicator. So you can make a broadly informed decision that if all of these things line up to the conclusions that you're drawing, then you can have a better indication of what's going on, rather than falsely having data be a confirmation bias.
Yeah, and let me show you this other thing I was doing here a second ago. If we're at the 4 hours, for example, where we're seeing it like bouncing off of, like right now in the 4 hour, it could drop all the way to like 14 cents without flipping back out of the bull trend here, short term. So there's still room down before like you would despair on the 4 hour timeline, thinking that we flipped the trend again, but we have flipped the 4 hour trend here. So wait, there's one more thing I was going to show you is, remember when I changed to Heiken Ashy, like if you're in the regular candles, it changes the way that, the clarity of all this stuff. That's again why I really like the Heiken Ashy model. It's just so much cleaner. But that's probably the only thing that I don't do. That's not like a vanilla indicator. So the third indicator that I think is really important is the, what is it? OBV, the on balance volume. This is an indicator that shows you the volume moving into or out of the asset overall. So in a healthy upswing, I want to see this making a new high, a higher high than the previous high, and a higher low than the previous low on the correction. That would indicate to me that money's entering the market. So right now we're looking at wax and dollars. And let's go out to like a 1 day timeline here. Here we are on a 1 day, and we're all the way back to like between October 2020 till now. That's how far we have this graph. And you can see that there's been a lot of money moving into the wax economy, not out. And even since like, so let's see, we went from like 4 or 5 cents or so down here, with even negative, and it can go negative for sure. So this one started at 0, and then looks like money left wax when it first opened on the market, at least on this exchange. But that's why I think
wax was worth like $1 or something when it first came out, right? Like it started at a price that was like immediately crashed.
We're also charting it since it started trading at Bitrex, so it looks like it hit Bitrex at whatever the price opened at, and then the money like started leaving wax into dollars from the general trading happening there, and that trend didn't stop until like fully didn't stop until pretty recently here in January 2021. I'd say like around here the money stopped leaving, at least at Bitrex. Remember, we're only looking at Bitrex USD right now. We're not looking at all of wax. But anyway, so that's what you can tell by this indicator. It shows me money's like moving into the asset, not like us fleeing it. This is also great for stocks. Like I love to like analyze a stock, especially stuff where it's like they're going into earnings or something. You can see if value is entering the actual like asset versus if it's leaving the asset, which isn't represented by the price. Because you can tell here when it was at 5 cents, like the the amount of money in the market was charting around here. Then it went from 5 cents all the way up to like 30 cents, which put us up here. Let's see. And then it went all the way back down to like less than 10 cents, but it never fell much further than like, let's see, last time we were down here was when we were here. It was around the same, like this peak. You can see the amount of money that was in the market the first time we hit 10 cents was less money than when it corrected back down to the next time it hit 10 cents and bounced up again right here. So overall, this makes me think that on Bitrex, this asset seems to be like having money entering it overwhelmingly.
And that right side is the volume in dollars, like this 10 million, 20 million, or is that wax?
Yeah, in dollars. Yeah.
Okay.
Yeah.
So some people are asking about like utility tokens like Selenium. I guess is there a
Selenium trades on Alcor, which doesn't have an API that backends into trading.
So I guess in the context of Alcor Exchange,
think,
some people are asking, so are like there certain indicators that you look for in the Ether markets or things that you could see on Alcor? I mean, I personally, as not the expert here, I would say that Selenium is kind of an outlier right now to try and speculate on with chart analysis. One, because it's only been listed for like 6 hours.
That's the thing. You don't have a history.
Yeah, you don't have a
back to what Max
analyze.
had said, like looking for something with a long history because you just don't have that many data points to go off of. And then also trying to use technical analysis to speculate on something like Selenium, I think is not ideal because the full utility of the game is not established yet. So the only thing that you can do with Selenium is stake it, whereas like eventually it will be utilized as a crafting token and be burned in however many mechanisms there is in Green Rabbit. And so like, to speculate on something that's not fully fleshed, it's hard to tell where Selenium would be. So I mean, I guess there could be some early indicators and strategies, but I would be very careful doing that since the game is still being developed, and so you don't know what the full breadth of the use of that token would be. And
so I'm not sure if you can see if you're seeing my screen still, but Alcor actually uses Trading View as its charting mechanism. So you can just click on indicators, and you can add those things here. So we can do like the OBV. Let's see if the volume.
Wait, where'd you find that on Alcor?
It's just on Alcor, and then at the top here where we can change the hours and the
indicators.
charts.
Indicators.
So I've added the Bollinger Bands right now, and I've added the OBV, which just as I expected isn't going to chart, because how would it calculate that if it's who's reporting
it's
this?
It's just in a really bad color. It's like in dark blue. You can barely see it.
Is it?
Yeah.
Let's see. Is there? Let's change it to a light time view here. Let's see if we can find the. Yeah, so you can add these indicators as long as this is Trading View's like API that a lot of people use. Oh yeah, here we go. So we can actually take a look.
So I think that's just bad design.
Yeah.
Dark mode.
So we can take a look at. So you can see overall the volume of Aether and Wax shows that Wax had pulled in a ton of volume, and then since then is selling out of that volume. So here's the lowest low. The next high that it was making on the retrace here, which is just from here to here, by the way, a lot of money flowed into the market respectively, like on the RSI. So you can see how much it took flowing into the market to move the price relatively little compared to like if you're looking at this amount of money in volume, how like that similar amount of money here, I would say, was able to move the market significantly more. So these indicators can help you understand a lot more about like the health of an asset on Alcor directly. So we can add B bands as well.
And I guess you got to keep in mind some of these things because like, and I guess the same goes for typical crypto assets as well. It's like, what is the distribution model? What is the tokenomics of it? Like, how do people get coins? How do people spend coins? How are more coins introduced or taken away from the economy of this particular coin. So those are all things to keep in mind as far as how it's distributed, and that gives you some
this is
insight
also
into how to read it.
This is also a token for a game, so like developments in the game are going to majorly disrupt what the charts read. So like I don't know if the charts can see like that our planet could create a new use case for Aether. Like that's hard to predict.
That's true, but
yeah,
at the end of the day you can see how this indicator is still behaving the way we expect. So on the upswing, when we broke out of the downtrend, which happened here at the very low, we crossed the RSI, which is the average, the moving average here. And then we started going up like you would expect, having closed a day above, since we're looking at the daily chart, having closed the day above the RSI, we're now moving up. Great. And then as it corrected back down just to that moving average and continued to climb again until we lost we lost it here. That was May 20th or so. We closed the day below, and that was a big red day. And since then, it hasn't closed above the moving average again. So we've been stuck in the downtrend. So it is still helping us understand that, yes, currently it seems that value is leaving Aether into wax, and Aether in wax terms is in a short trend. I wonder if we can actually add like a super trend here. So it'll actually tell us what the trend is. Oh baby, it's got the super trends.
All right, somewhat. So just now that we've been doing this for a little bit, just a friendly reminder: this is not financial advice.
Yeah.
But someone was curious what your thoughts are on TLM and Aether. Maybe like it gets even more complicated trading game token to game token too. So.
Yeah, I mean, I will definitely share my thoughts first because I have like some very specific thoughts on all that stuff, which is. Oh, so I added here, by the way, the super trend. I just wanted to show you. So the super trend, you'll see, is less sensitive to this kind of a break in the direction of the trend, and that's this green line. So the super trend turned bull right here, telling us that the market's going up. That's this like green line again, and the super trend becomes invalidated with a daily close that closes below the actual green line that's drawn on here. So you can see. We didn't do that until right here, and this is where the trend flipped to short. So now we're in a short super trend, as well as we already assumed that we were short because we're closing the day every day below the middle B bands line, and we're assuming short is the direction at the moment for the future because the volume seems to be making lower highs and lower lows. So this low is lower than the previous low, and this last high here. Still lower than the previous high here and here and here, lower. So the charting, like the technical analysis of this one, shows me that it's in a downtrend and it should potentially continue that downtrend, at least in the short term, until I want to see one of these day candles close above the Bollinger Bands. When that happens, I might be signaled like now is a good time to purchase, or now is a good time to stop selling, or whatever, or to stop buying and wait, like hold and wait for, like basically your strategy might be to buy every day a little bit while it's below this line, but once it crosses the line, be like, okay, now I'm going to stop buying because I know it's going up, and I'm going to hold for a while. And whatever you want to make your strategy, this can help you kind of like pick a direction. So the question about TLM and Aether I want to get to was, I personally, when I trade, and especially in like yield farming and participating in decentralized exchanges and finance stuff, it's important to me that there's a way into and out of the assets that I'm playing with. And TLM has that, and so does Wax, in terms of I can trade my Wax on like Qcoin, on Binance. I can move my TLM to the BNB chain. I can trade it on a different exchange. I can trade it on Uniswap. Same with Wax. I can turn my Wax into Wax-E, trade them somewhere else if the price that I'm seeing on Alcor isn't a price that I would agree to trade the asset for. An asset like Aether and like Selenium, and by extension a lot of the assets that trade on Alcor exclusively trade on Alcor, and that gives them a serious disadvantage as far as the market manipulation factor. Like there are people, like it's known, I mean, you can look at the addresses on the public ledger. There's many people in all of these assets that hold very significant positions in those assets, and they can, using that position, not necessarily manipulate, but they can influence the direction of the market substantially. And when I say market in that sentence, because this is the entirety of the market for those assets. Like,
yeah, there's no arbitrage to hold whales.
Like if I started dumping millions of wax onto the wax a ether book or whatever, onto one of the like exchange books here, you know, and started tanking the price of whatever that asset is, someone else could come in with wax from a different exchange and start, you know, or start buying all the wax that I'm trying to sell and then sell it back on another exchange where currently the price isn't tanking. That's what an arbitrage is. So that's what Mark just said. Arbitrage would make up for that. Arbitrage is trading as a trading strategy where you exploit a price difference between two exchanges and trigger the opposite trade simultaneously. So like if wax is selling, let's say I'm trading wax for US dollars here and I'm getting, let's say 10 cents per my wax, but right now Qcoin is offering 12 cents per wax. I could, you know, sell here and buy there, or buy here and sell there simultaneously and pocket that 2 cents different instantly with no counterpart risk, other than the counterpart risk that my exchange won't let me withdraw my funds.
Yeah, I guess my point being is like arbitrage is in some ways takes away some of the monopoly power of whales and these single market assets.
Yeah,
that,
it also
having
it
other
also
options
keeps
through other in exchanges and other markets can then give you some options that take away some of the controlling interest that these single market assets do, and therefore whales have less of a control over a particular asset because you can always go somewhere else and get a better
and there's
price.
other avenues for also those pumps to happen. Like TLM, the recent TLM pump did not start on Alcor. That was on Binance. Like there's trading volume spiking on Binance, driving the price of it up on that exchange, which then the people who trade arbitrage saw the opportunity to buy it cheaper on Alcor while simultaneously trading the newly spiking price on Binance. And that is what drove the price to spike. Whereas assets like Ether require an internal event within this market network to like pump that market and pump that price. And it is a use case for a token to just be traded. Like, you know, there's plenty of tokens like Dogecoin that have tons of value behind their network, and the only use case is you trade it with other tokens, you know, or you give it to people for fun. So like Ether is a similar thing where it's like it's driving value from being tradable against these other assets, as well as, you know, it has the utility in its game, which I guess that's a one-up it has on Dogecoin. But the real value comes from the wider network of, you know, different exchanges and being able to access different like financial opportunities. Like, oh, I could use my Dogecoin, for example, to pull off of this like specific exchange, move it somewhere else where I can pair it with a different asset that I might not have access to on this exchange. And now I'm using Dogecoin as a vehicle for investing into an asset that I actually do want, but only have access to through that. So those types of utility like options really drive value to all these weird token like meme coins and stuff. And like the real value for those tokens is that they exist on many exchanges. Like the reason I use Litecoin all the time is because I can deposit it to any exchange and the transaction fee is so low. It's not because Litecoin is my favorite project in the crypto space. It's just an easier one to go between exchanges with because I don't want to get eaten alive by the fees. And in the same way, like those value propositions very realistically exist on Wax and on TLM, but are still being worked out, I would say, if I'm being generous, on some of the other Wax tokens, you know? So I prefer, like, I like to trade and speculate with like Selenium and with Ether and stuff, but when it comes to like serious trading and serious yield farming, I stick to assets that have an infrastructure outside of Alcor, because I was trading Bitcoin back in the Mt. Gox collapse days, and that the reason that happened was because Bitcoin only fucking traded on one exchange, which was Mt. Gox, which was actually, like, here, a little like trivia, it was a Magic the Gathering trading website. It was MTG for Magic the Gathering EX, like MTG online exchange. You could trade people Magic cards or buy them with money, and then they also offered Bitcoins. And that was the first exchange. And then when that exchange, like, you know, lost their private keys or whatever, the entire Bitcoin market collapsed. And that scenario can realistically play out with assets that only trade on one market. And that's a big, you know, threat, I think, to a lot of assets on like Pancake Swap as well as like, you know, all these other sub-chain tokens that have all these like little sub-markets where they trade all these like meme coins and stuff. So it's not unique to Wax or anything. But personally, when it comes to, you know, real investment moves where I'm considering this like a longer term play, something that I want to, you know, provide liquidity to a pool that I'm not going to touch for the next like 7 or 8 months, I'm going to do that in an asset that isn't, you know, connected to a game that doesn't have a history as long as those 7 or 8 months I'm expecting to hold the position for. So it has to be something for me personally that counts as like having the off ramp outside of Alcor. That's like my big caveat to sticking with only Ether and TLM.
So for the Banano comment, I mean, I guess we could do this all day and just be like, hey Max, read this thing, tell us what you think. But I think you did touch on a certain point that Banano is similar to Dogecoin in the sense that Banano deliberately is completely distributed for free. And there's like a million ways to get it. Banano's use case is particularly just to get people to have cryptos, to be able to use it in a way that breeds adoption. And so Banano's utility and its speculative price, I at least in my opinion, would be, you know, based on its ability to be traded on different exchanges, be given freely, be tipped back and forth or spent back and forth, and people like that value. And so that value is driven by how people use it, and, you know, and therefore the price that you'll see on an exchange is driven by that. And so they keep coming out with new ways to produce Banano and also to spend it. And, you know, it just exists to exist. So it is funny that, you know, a coin that was literally just made just to give people some play monopoly money to mess around with is now worth, you know, I don't know, 1/10 of 1 cent or something. Yeah. But it's gone up quite a bit over the last few years.
This is the script that Sid created that I'd love him to join me on stream to talk about it. So I think me and him are the only ones who have it. It's the Humble Trading Helper. It's it'll print buy and sell on the chart when you should make your moves. So
this is a script that Sid developed, or
yeah, Sid and I have been using this for years. But yeah, Sid pretty much put all this together.
Okay.
But it's really cool.
So I mean, like, Seeker has a question about like, why did Wax spike? So like, I guess there's a lot of factors in all that stuff, but that I haven't looked into exactly. But it's basically just somebody with a big order bought somewhere, and then the arbitrage did the rest and pulled the entire market up. Like, there's one exchange where somebody must have bought enough to pull the whole market up, and then it was, you know, enough volume to, because at the end of the day, here, let's actually talk about that too, because that's something that comes up a lot. At the end of the day, Wax has a pretty low market cap. And that's another thing that comes up all the fucking time when people talk about, like, let's go to is like market cap and that stuff. So yeah, and I think that's something to look at to see if something is really as valuable as the trading price is. Yeah, so you can compare if this is an accurate valuation by saying one WaxP token is worth 15 cents or a given stock's worth $50 is to in market cap as an indicator to see if you believe that valuation is accurate. Yes.
So a market cap is here when it's like a main metric that any like coin trackers. I went to CoinGecko and just tapped in WaxP. It's like market cap is telling me the first thing. So the market cap is basically, it's telling me that one token right now is like 15 cents. There's 1.6 or so million, or what is that? Yeah, million tokens in circulation. No, that's got to
be like trillion.
Oh, billion. Yeah, billion. 100,000 million billion. 1.5 billion tokens of WaxP exist total right now in circulation. And if each one of these tokens is worth 15 cents, then the total supply is currently worth $232,845,424. And that number is the market cap. It comes from like the stock world, and it's really not a fair metric, I'd say, because this isn't a company. Normally a market cap represents like the value of a company and all of its like physical assets, as well as like its potential future earnings and all that stuff. But since WaxP isn't a company, but rather like a decentralized network or a protocol, really, it's hard to quantify, like to equate this, because like I'll see a lot of the times where it's like, oh, it's a $232 million market cap. That is the same as, you know, this company on the stock exchange, which is like, yeah, you can't make those comparisons because like one is a company and the other is a protocol. You know, so again, it's like, that's basically if all of the tokens were currently being bought at the moment, this is the amount of money it would take to buy them all. And then the next thing that's also important to note is the fully diluted valuation, and that's based off of how many tokens can exist. So like we said, right now 1.5 billion do exist in circulation, but there is a supply cap for this coin at 3.7 million or 3.7 billion. So that means like when all of the wax tokens are in circulations that ever will be in circulation, it would require about, you know, $500 million to buy them all right now. So again, $500 million fully diluted right now, like less than $250 million is the entire value supply of all of the existing wax tokens. Again, why this can be misleading is because some of these tokens are staked, some of these tokens are locked up in whatever, like burn contracts, anything, any of this stuff. Like they're not all available for sale. So this number is based on what's currently available, and then that value being, you know, extrapolated across what's totally available, like what would totally theoretically available. But the reality isn't that simple. And so I don't know if like it's important to be aware of the metric, but it's also like important to know that this isn't a company, and you know, a market cap might be like considered something like it has a lot more weight in different asset classes, I would say, than cryptocurrency, because, you know, some cryptos are companies, but some cryptos are not, like, and this is not, this is a protocol. But anyway, what I was gonna get to, yeah, I guess that was actually, I wanted to talk about the market cap, because market cap is something important. So because it's so low, what this would mean that like if you put in like $10 million, you could bring up the price, you know, 10% or 20% or something. And again, $10 million in the investing in cryptocurrency world is not like, that's not a crazy amount of money. Like even this 200 million or 200 million dollars, even, that's like, recently there was a Bitcoin transaction that you could see if you follow like Whale Watch or something like that on you can see somebody bought close to $1 billion worth of Bitcoin in the last few weeks. So that's like, you know, all of the Wax network 4 times over, which would then theoretically be like, okay, so that would bring the price up to $1, like that same order of buying. So again, that's like, it's hard to say exactly why stuff happened, but here you can also see on the chart here, if we go to 7 days, I'm sure the volume will have spiked. Why won't you load? Oh, you did. Okay. Yeah, so there it is. One person, like one order, volume spiked way the fuck up. So you can see the day before, $10 million in total volume, and then next day, 16, oh no, I went over it. Yoink. $106 million. So it's more than 10 times the amount of normal buying pressure in a single day. That's why the price went up so high. Hard to say why or who or where, but like that's what happened, like in a broad sense.
Yeah, I guess you could fish around and see what the wallet is, but
yeah, and you can also, like on here, you can go in and you can see markets. It'll tell you where is it trading, how much money is moving through that market. Sometimes these numbers are totally faked. Like a lot of these markets aren't decentralized. Like Bitrex is a central authority. They report their own numbers. So this is the number that they're reporting. It's up to you to trust it, I suppose.
Yeah, like you got to be careful sometimes, like particularly if you're looking at like CoinGecko or CoinMarketCap, it'll show all the exchanges that a given token is listed on and whatever pairs and the price for that. Yeah. But you have to kind of do a little bit of research, particularly, I mean, obviously there's kind of like the top level ones of like Coinbase, Bitrex, KuCoin, whatever, like the kind of heavy hitters, Kraken, whatever. But like if it's some no name that you never heard of, then and it's saying like, you know, something's worth $1 when everyone else is saying it's worth 15 cents, there's probably very low trading volume on there, or it's just a sketchy exchange. Like I remember when TLM was going to be listed on Binance. Before that, it was only listed on some like weird Chinese exchange. And so if you looked at CoinMarketCap or CoinGecko, it was saying that TLM was trading at like $4 or something. But if you looked into it, about like read into that exchange, it had very low volume. It was kind of bizarre and didn't seem that legit. So it was kind of just a false number that was either one trade that was being pulled by an API or whatever. So there's a little bit of do your own research to make sure that you're not reading into numbers too much. And volume is a good indicator. Like this 24-hour volume, you see some of those are like in the millions of dollars, and others are like in the thousands of dollars. I would not trust a price point that I saw on an aggregator like that based on a few $1,000s in volume.
The depth indicator here also helps you understand a lot. So like the 2 + 2 and -2% depth, what this means is, like, for example, if we go to like here on Bitrex in USDT, there's only for +2%, there's only $1,600 worth of volume there before I would suffer slippage in excess of 2%. So what this indicator means is that if like from the current spot price to 2% above the current spot price, there's only $1,600 worth of available wax on the order book. But in the other direction for sale, look at that, you got $40,000 available in that same amount of depth from the spot price -2% down.
So is that telling you there's more sells than buys on the order book?
On the order book, but that doesn't mean that they're like being filled. This just means that they're available. So what this means on the +2% side to me is that right now it only takes, $1,600 to move the price of wax. Or are we looking at wax? Yeah, to move the price of wax in dollars on Bitrex up 2% from where it is right now, I would only have to buy $1,641 worth of wax. And then the spot price would come up 2% because that would be the next available listing. That's what this is telling me. So it's telling you like how much is available within 2% of the spot price before, you have to pay more than 2% to fill those orders. Now, if you are... Oh, sorry.
Would you be down to show how you could spot like a scam coin on Alcor? Because, people buy like weed tokens and other things that are later like said to be scam tokens, but how would you figure that out before you buy it?
Yeah, so if I'm on Alcor, and there's a ton of options here. I'm going to go back to night mode. I don't like...
Also, AMJ just asked if there's any website to get fundamental analysis for crypto.
Was it Token or Trading View? I know there's a few people who like publish their specific TA, and you can like follow people there too. I personally don't, but I know a lot of people do, and they say it's a great spot to like find that stuff. Like I personally just like to look at it myself and make my own decisions, because at the end of the day, like no one else is paying for these decisions. Like you got to pay for it. You could follow somebody's advice, but they don't pay your bills. Like they don't. When
They're
you
not
make
gonna
a
give
decision,
you your money back.
Yeah, they don't like. Yeah, so I prefer like trying to figure it out myself, and like we got the same access to the same tools as the guy who's making all these informed decisions. So I like to try to make my own decisions, and then maybe sometimes I'll look through what people are posting and see if it lines up with what I want or not. But ultimately, I'm just looking for confirmation bias. Like I really don't put a lot of value in anybody's like TA, because at the end of the day, I do think it's like partly like tea leaves, it is true that like these patterns play out and it does help, but as you saw, like it's not always true. Sometimes it'll break the cycle and then it like flips, and it's like it's not 100% predictable.
Yeah, I think the adage with statistics is correlation is not causation. So I think you can correlate things, you can see patterns, you can see trends, but it doesn't. It is not a black and white thing.
That said, me and Sid, following like his trading script, have been pulling like between 4 and 8% realized profits per month out of the stock market, because stocks are a lot easier to track with those types of tools, because the market actually closes. There's like a closing day and an opening price, and like there is a lot more nuance to like technical analysis when there is a closing price to reach and an open price and all that stuff. Like with crypto markets that never close, where do you define like manipulation points, for example, or like how do you define the like start of a trading cycle or whatever. It's all very fluid and harder to track and harder to chart. Stock market stuff is a lot easier to read because it's, you know, it runs for 8 hours 5 days a week. But yeah,
AMJ, are you asking about a website to learn more about trading analysis? So I think that's what he's asking for.
Or are you looking for like
educational resources?
Or are you looking for like a conglomerate or like some sort of group that like gives analysis like, hey, we've determined X, Y, and Z. Here's our publication or something.
There's a lot
I do know a few publications that do that as well. They're extremely expensive. Like a lot
of the legit ones you have to buy into is basically if that's where that.
Like there's a few research publications that I have subscriptions to that they'll publish market research for me and like give me basically they'll be like, here's a new asset we recommend you add to your portfolio, you know, buy it at these channels, buy up to this price, and then like store it with these means. It basically break everything down for you and then tell you exactly like who the team is and all the research on it and publish it all for you. And a subscription to something like that costs like between $2,000 and $5,000 a year. And you know, it's hard to say if it's worth it. Like, yeah, I've made much more money than that from it, but it also, you need the money to actually throw at the opportunities that they're offering you. So if it costs you all your investing stack to buy the subscription, then don't do it. You know, like if a $5,000 subscription is something that you're like, okay, yeah, 5,000 so that I can have all the like insight and I don't have to do any of the research myself seems reasonable to me, then it might be. But at the end of the day, you're paying for advice, and I don't know that advice is ever worth that much money. But that's personal, you know. I mean, it's up to you to decide if it's something you want to pay for or not. And if you do, I guess hit me up on DM so I don't blow people up on publicly. But I can let you know what the companies that I have those subscriptions to and if I recommend it or not. I guess I recommend, like, the advice was great so far. They recommend really good projects, but it was also, you know, it was a bull market. It's hard to miss. But to be fair, their recommendations have dramatically outperformed the rest of the market as well. So it's hard. It's, again, like, advice is hard to price, because at the end of the day, you know, if you're getting good advice, it might make you 40%, and 40% on $1 million is, you know, $400,000. That advice might be worth $5,000. But if you don't have the $1 million in the first place, you know, what are you going to do with the advice if you can't?
You make some killer trades and break even on paying.
I can make some kick-ass trades and still make 40%. But if I'm making 40% on $100, you know, $40 isn't going to cut it for the cost of the advice that I moved on there. So it's really hard to tell you if stuff is worth it or not. But they definitely exist, and in my experience, you get what you pay for. Like, there's much cheaper options, but man, a lot of those will be like, you know, they'll pull you in with their like sales pitch of like, look at all these recommendations that we did in the past, but they're cherry picking their winners and they don't show you all of it. Like, they literally recommended everything that came out that year, and they're like, oh, look at all the ones that did well, we recommended those, you know. Whereas some of the more expensive ones, before I bought into that, I saw like they show you like, here's everything we ever recommended, along with which price point we told you to get into, what we've told you to do since then. So it's a lot more comprehensive, but it's also like a lot less asset pitches. Like, I think they'll give you maybe 1 or 2 recommendations every month. But again, yeah, hit me up on a private chat. I can tell you more about the.
Do you want to call? So, work. Do you want to do this last part as far as like being able to see spot scams and legitimate pairs on Alcor, and then kind of wrap it up, since we're going on an hour? And then and then the idea is that we'll our friend Sid will, if he's down, or just Max again to go into more depth.
I can get way deeper into this stuff,
the idea was like we could kind of set the groundwork and the foundation of some of the terminology and some of the jargon and some of the ideas, and then we can go deeper dive and maybe or do like a question and answer kind of thing I think, on another segment.
I think mainly we want to answer questions just because otherwise we're talking about stuff just to hear our own voices. So like answering questions is the whole point of this in the first place. So if you have questions, definitely ask us. And if you let us know, you know, before Tuesday, we can answer questions. Like, maybe we can end every segment with questions that were asked before. We have a tech talk category in our Discord. Maybe just tag Max or myself, and we'll try to like write down the questions and address them on air.
So there's a ton of tokens on here. I'm seeing like Moo, Hodl, XXX,
Moo,
Zomb. Let's see Moo. So the first thing I'm seeing here is, okay, there is a little bit of volume. Oops, what have I clicked there?
So like anyone can list a trading pair on Alcor. So like that.
Yeah, let's not do that.
Even if like a given game doesn't want to be on Alcor, literally anyone can list a trading pair. Now, whether or not people engage in that trading pair depends on whether it's useful or makes sense or not. But you know, there's all kinds of weird pairs out there that have little to no volume just because no one gives a shit about them. But technically, you can do it.
Yeah, so Moo, for example, right? It doesn't have the banner up here that like the first like line of defense basically is Alcor itself will actually warn you of like, let's see, like XXX is for sure a scam token. And it'll tell you like, oh, potential scam. You can tell also, I mean, nobody's fucking trying to buy it. Everybody who has it wants to sell it. Like there's literally not a single bid on here. You know, so it's like, I don't know. I wouldn't
zero trade history.
Yeah, I mean, you could literally buy all of these if you want, but there is nobody wanting to buy any of it. So this one is pretty clearly, obviously. And again, we got the first line of defense working here. But Moo, I wasn't seeing that. So the next thing I would do for Moo is check it on the actual blockchain. Like, what is... let's see, where's Moo? Moo, there you are. So there, let's find Moo token is...
Moo.cow.
There we go, moo.cow, I suppose. So I'm going, ooh, .cow. I just followed this to Alcor, and now I want to see. First, I want to see where the Moo token is. I haven't actually found the perfect place to like type in where I can just type in Moo and look it up. So I have to find usually a wallet that holds it. Let me see. I bet you Alcor Swap has a ton of them, right? Oh, but they'll be paired on Alcor Swap. I don't want to see the paired ones.
I see people tipping. Someone mentioned Captain or Cap, CAPT, and Crew. I see people tip that all the time or like do giveaways and stuff for it in Discord. I have no idea what Captain does or is for.
So the next thing I'm going to do is check Moo's actual contract on the like blocks.io. So here's Moo, the token. So I'm seeing that there's a circulating supply that matches its maximum supply, I think. Yeah, yep. So all the tokens that can exist already do exist on the market. That's not bad. That means at least they're not like going to get rug pulled at some point in the future because you can't change the max supply once that's been defined. The big thing that's concerning me here is there's only 161 people who hold this token. That not even people, individual wallets. And I'm sure that Alcor Swap is one of them. So at least there's only 160 people. And then let's see how it's distributed if I keep scrolling down. Okay, so yeah. Here we're seeing NFT.cow owns, even though all the tokens exist, they hold them all. Like 99.999999% of all of them are being held by NFT cow. This is, for me, this is like a deal breaker. This means that I have to trust this wallet not to flood the market with the tokens, to not destroy the value of the existing supply that's circulating. Because obviously if they're just in this wallet, they're not circulating on the market. So then the value that comes from tokens comes from the availability of those tokens. If suddenly they make all these tokens available, the price will collapse instantly.
I mean, you could say the same thing about TLM though. Isn't there a shit ton of TLM in the treasury waiting to be circulated?
So that's the next thing I would look into then is like, what is this moo.cow address? Is that like an individual or is that like a contract address? So if like you're saying TLM has a huge amount of its balance, but nowhere near that centralized amount, you'll see. But here, teams.world, others.world, like these are, the .worlds are like the federation accounts. So like it's a good amount, but it's not even close to 99.99%. These are like actual people here.
For sure.
And then the other thing about TLM is we got a distribution of almost 1.5 million individual wallets holding TLM tokens. And then, but here we can see, you know, the supply isn't fully diluted yet. It's only about half of it is in circulation currently. And a big thing about TLM now, that is not like it is the same concern. This is kind of concerning. This seems centralized, but the way that I am put at ease with TLM is the way that their smart contract actually distributes it. So when you look at these wallets that hold these balances, those wallets are actually run by a smart contract. There isn't an individual who has access to those funds. It's being governed by its distribution model, and it is, sent out based on who's mining on what planets and all that stuff.
And that's why you read the white paper.
Yeah, and that's why you read the white paper. You do the research, you look into all this stuff, and you find out like, okay, well, yeah, 42% of it is being held by others.world, but this is the world benefit that comes paid out through the Federation account. So once you understand that, like, oh, how are all these .worlds? It's like, well, yeah, these are all Federation accounts. And then you can look up on the white paper how this is all distributed and stuff. And then again, with TLM, it's an actual smart contract that holds these balances. So you can even go a step further and verify for yourself that the smart contract was written in a way that it actually does what they say it's doing, because the source code for that contract is open. So anybody can look at it and vet it and confirm that. Whereas if it's a white paper like Green Rabbits, for example, and they're like, oh, we're going to hold all our assets in, Sieneka's wallet, then it's like, well, you're saying it works this way, but we all have to trust that Sieneka is going to like sign the thing. I'm not saying that's how they do it. They definitely have it like much better figured out. But like, for example, if that's what they were saying, that would be a bigger concern. And at the end of the day, it comes down to not just who's holding the tokens, but how are they being distributed, and does the team behind the token have a track record of sticking to doing what they say they're going to do. Where if you look at the history of TLM and Alien Worlds, the distribution model for TLM tokens has not changed. The white paper they put out in the original roadmap, since the original, like before even the roadmap, the white paper has never been changed. And it shouldn't, because people make financial motivated investment decisions these days based on those white papers. So when projects change those numbers, that's you're rug pulling early investors, which is frowned upon in my opinion.
Yeah, and it comes full circle to crypto as a whole. Is that when we were talking about hardware wallets and we were talking about having the control of your keys and your money at all times, is what is your threshold for trust? And if you're making large financial moves in a game with money, like real significant amount of money that you don't want to lose, you need to evaluate what your level of trust is. And so if you read if you're reading a white paper and say well, the distribution model seems a little sketchy to me, but I only put in $100 and I got way more than that in the bank, then maybe it's a worthwhile risk to take. But if you're putting significant amounts of money, then maybe you do want to read that. And if the distribution model or the holders of the coins seem like you're taking a bigger leap of trust, then maybe you need to rethink that decision a little bit. So it's always evaluating the level of trust and the level of security that you are personally comfortable with when making financial decisions, because 100% that power is in your hands, which is the strength and the weakness when it comes to using cryptocurrencies.
Yeah, it's definitely like that is the promise of this whole space, like the appeal to it, as well as the downfall of many people, because they get engaged in something that they don't fully understand, and there is nobody else. It's you and the blockchain when you deal with these assets. If you make a misstep, there is no customer service. There's no, even if you get a hold of somebody technically savvy, they can't help you. Once the transactions are finalized, it's immutable by design. Yeah,
unless they control the wallet, there's nothing
at which point
do.
That's true. I guess you could reach out to the person you've accidentally sent stuff to. But here I was looking at Aether too, and this is kind of in line with what we're seeing on the chart as well. So there's only 105 billion of them currently in circulation that exist, and that's including what's in the SR Planet wallet, out of 10 trillion potential. So this is what, like 1% of the potential supply of Aether currently is in circulation. And as you can see, I think the market is aware of stuff like that, and why, when you were looking at it, let's go back to Aether Wax, you can see it's like, oh yeah, like the value is leaving when we looked at what is it? When we can look at the B band and the, what was the other one? The RSI. No, not the RSI. We wanted to see the volume.
The OBV?
It is the OBV, on balance volume. That's it. But yeah, so it is like, it does stick kind of close to that. And then let's see. So we're looking at 4 hours now. So yeah, it's like a lot of money moved into the space, but still more in now than there was even when the price was way higher, which totally tracks because there's much more circulating now than there was here. Like the price was, you know, 0.001. Now the price is 0.0001, but there's significantly more value in the asset now, which, you know, obviously because the supply went up. So again, like these metrics are always fun to see. Actually, this is not a bad, not an unhealthy like looking chart. I think we were too zoomed in last time. Let's go back to a day. There you go. When you go zoom out a bit to the daily chart, you can see it change quite dramatically. Damn. Quite dramatically. So that's more dramatic than I'd expect to see. These should be pretty similar. Okay, they are. I was just not zoomed out far enough, so they are zoomed out. They're dumping that same way. Ah.
I think that's gonna wrap up our
Yeah,
stream for the evening now.
Yeah, definitely. Let me know if you have like some more specific questions, but I'd definitely come up with a little bit more of a like deeper dive into some of the indicators, some of the more like available or things. Oh, and then I actually found something I wanted to share with everybody at the end of the stream here. There's a game that's helps you understand yield farming and liquidity mining, and it's LP. Let's see, LP. Yeah.
LP Royale.
LPRoyale.com. There you go. You can I think you make like an account and you do like a fake kind of like mock version of like liquidity mining, but if you know, it's like competing against other people who are also playing. Like, you don't have, doesn't cost anything. It just helps you like understand how liquidity farming works.
Max 88.
Maybe, but you win NFTs and stuff for doing this. So you don't have to pay anything. I think you just send in. I send in with like the next season's about to start. So if you wanted to try to play like a gamified version, no stakes, doesn't cost anything to get into, this might be something people are interested in. I don't know, but you can also win some NFTs for playing this. But it definitely like explains, you know, like even this website has a few like really nice basic breakdowns of, and it's like a nice little like intro to liquidity mining and yield farming and all that, the world of like that stuff, but like, you know, made fun and competitive through like this game. Again, it's not real money. You just sign up and then you get like a balance of fake money that you can then allocate to all these different things that are referencing real world movements and stuff. And yeah, so it's no stakes, but if you do well, you win like NFTs, like in fun little like tokens that you can like trade for actual cryptos and whatnot. But cool.
Yeah, and then
I just wanted to end on something fun.
Yeah, and then there's the Tech Talk channel, there's the Tokenomics channel. So I mean, we're all on Discord all the time. So if you have stuff specific to a game you're playing or something like that, feel free to ask, and we can always kind of handle some of those more individualized questions there.
Yeah, I feel like, yeah, especially because like some of the stuff, it's not like it's not that you can't get it, it's just that it's not super intuitive. So I really like being able to like go and do like at least once a week talk about some of the stuff and get some questions, hopefully answer them. And then I really like this kind of like little weird game where it's like, oh cool, like let's approach it in a way where it's not like we're talking about
the game off when the season starts.
Yeah, definitely. I'll keep an eye on this too and let you guys know when it starts. But it is it's fun and it's, you know, no risk at all. Plus the whole idea here is just education, which I think is very in line with our non-financial advice.
Yeah, so I guess to conclude, if there's other subjects that you would like to discuss in this Tech Talk format, things in the crypto space or in the NFT space that you would like us to try and go more detail on, assuming we know about it, feel free to to ask, and we'll take that feedback and see what we can do.
Have a good night, everybody.
See you guys.